Hi, good afternoon. My name's Alistair Caithness. I'm the CEO of Ziyen Inc. So today I'm going to speak about Regulation 8+. And for any investors or potential investors in the company, it's important to understand this is the process the company's been formed. And this is the way we're funding the company at the early incubation stage prior to actually going onto the markets. So Ziyen Inc. was the 33rd company in America to be qualified under Regulation 8+. We were qualified as a software company, information company, and in round one of funding, our shares were at 25 cents. So over that 12-month period, we developed the business, and during that period, we acquired our first oil asset. So we were no longer just a software information company that provided information on oil and energy contracts. Now we'd actually acquired our first oil contract ourselves. This allowed us to refile at a higher share price, and we opened round two of funding. During that 12-month period, we've acquired a further 17 oil assets for the company. So we're increasing the asset value of the business. We've recently moved into production, and we have our Ziyen Advantage prototype unit ready to start trialing in the probably Q2 of 2019, whereby we're going to be generating renewable energy to push down oil production costs. Because rather than pull the electricity off the grid, we believe we can generate the electricity cheaper using renewable energy. And by generating the electricity cheaper, therefore, we are now producing oil cheaper than everyone else in the Illinois Basin because we have this cost advantage. As we move into round three of funding, the share price is going to be higher again. So if you think of Regulation 8+ as a way to fund a company, what it's allowed me to do is, rather than go down the traditional route of actually trying to finance a company where normally you're an LLC, normally you're out there looking for venture capitalists to put large investment into the business, what I was able to do was I was able to go out to the crowdfund the early stages of the business with the goal to IPO on the NASDAQ further down the line. So what's excellent about Regulation 8+ is I don't really have to deviate too much from the original plan and as the business grows, because I have a venture capitalist dictating to me how the business should be structured. Also, the advantage for non-accredited investors to invest in Regulation 8+ is you get a return, well, you get that timeline for return on your investment. Because we're going through rounds of funding, I'm actually giving you an exit strategy. The exit strategy is, once we actually create an valuation in the business, we're going to IPO on the NASDAQ, and when we IPO on the NASDAQ, how many shares you've acquired in the company, you'll be able to trade. Whereby, if you just put the same investment into an LLC, if you put $10,000 into an LLC, what do you actually get? Well, 1% of their company, 1.5% of their company. It really depends on each company. But ultimately, the other problem with most startups who are LLCs is they have no exit strategy for the investor. Because as I'm trying to put the company onto the stock market, and the day we IPO, then you can sell the shares, and if the share price goes up to a certain level, you're going to get an excellent return. So the people who came in at round one, when the shares were 25 cents, if the share price goes up to $5, then essentially they're going to get a return of 20 to 1 with their investment. Whereby if you invest in an LLC, first thing is, if you ask them what is the exit strategy, here's the problem. I can give you shares in my LLC company, I can give you 2, 3, 4%, but it's a minority stake, it's nearly impossible to get your money back. And then again, the only real exit strategy most of these people have that run these businesses is, well, we're going to grow massive, and once we're a massive, we'll get acquired, and when we get acquired, you get the big payoff. But that actually rarely happens. So if you've got a startup business out there and you're looking for ways to fund your business, then Regulation 8+ is a great model to use. Now, the way we're looking to do it with our business is, round one of funding, we were 25 cents. Round two of funding, we were at $1.50. Round three of funding, we're going to be filing with the SEC shortly, and when we get qualified at our new share price, then this is where we're going to sell shares in the business again at a higher price. Now, our goal to actually IPO in the NASDAQ is, once we've finished going through 3 rounds of funding, we're going to give up our Regulation A+ status, convert to an S1, and IPO onto the NASDAQ small caps market as an S1, because essentially we want to IPO and give us the best chance for success. And if we IPO as an S1, essentially we're IPOing in the same format as Google, Facebook, and all the other big tech companies, but the way our company's getting developed is going to be an oil, energy, and information-based business. So out there, regulate for anybody who's bought shares in the company, thank you very much. Anybody who's interested in buying shares in the company, then round 3 of funding is going to open soon. I want to thank you all for coming on board, joining us in our journey, and if it wasn't for Regulation A+, for all you non-accredited investors out there, this is the change in legislation that's given you this opportunity to own shares in a startup from the ground floor up. Thank you very much. Have a nice day.